Most short-term rental hosts are tracking data, occupancy, ADR, revenue. But here's the problem. Tracking data isn't the same as understanding it. And if you're looking at the wrong numbers or the right numbers in isolation, you're making decisions in the dark. In this episode, we're breaking down the 5 numbers every operator should check every single week and how to use them properly to drive performance. This is STR Pricing Pulse, powered by Beyond. Welcome to STR Pricing Pulse, where we cut through the noise and focus on what the data is actually telling us about pricing and demand in the world of short-term rentals. I'm James Varley, the founder of Launchbase by House Planet. This series is powered by Beyond, our exclusive data partner providing the market and pricing insights behind every episode. And with me, as always, is revenue management guru, Dr. Zak Ali. How's it going, Zak?
Hey, James. Good to see you again.
And you. All right, let's get straight into it then. What are the 5 numbers every STR operator should check every single week?
Okay, so it's not actually 5 new numbers. It's actually 5 ways of looking at the numbers operators actually already track. So if we start off with occupancy, but adjusted for cancellations, so you actually know what's real. ADR, but compared to the market at the time of booking, so you know if you priced it right. Availability, but in terms of what's actually sellable once you account for gaps or trap nights or orphan nights, as many like to call them. Revenue, but actually broken down so you understand how stable it actually is. And then occupancy again, but with pickup, so you know what demand is doing actually at that moment in time right now. So those 5 together actually tell you what's real, what's weak, what's at risk, and what to do next. I guess it's like having all the ingredients for a dish and judging them one by one. So flour looks fine, eggs look fine, sugar looks fine, but that tells you nothing about the outcome. It's how you combine them really that matters.
Makes sense. Okay, then. So what changes when you stop looking at these metrics in isolation and start looking at them all together?
So the actual story changes completely. In isolation, everything can look perfectly fine. You know, together you start to see whether performance is actually strong or just looks strong. You might actually have high occupancy, but then low rate capture. You might have strong revenue, but it's actually fragile. You might be well booked, but actually unable to sell what's left. So instead of reporting performance, you actually need to start diagnosing it. And that's really where better decisions will actually come from.
Quick pause then. This episode is powered by Beyond, our exclusive data partner. If you're still setting your prices manually or relying on gut feel, you're very likely leaving money on the table. Beyond uses real-time market data to automatically adjust your pricing based on demand, seasonality, and what's actually happening in your market. And the results? Hosts using Beyond can boost their revenue by up to 20%. So if you want to stop guessing and start pricing like a professional, scan the QR code on screen to find out more or hit the link in the show notes. All right, back to it. Zak, a host out there might be achieving occupancy of 90% plus and think everything is fine in the world. But give us a scenario where strong occupancy is actually hiding weak performance.
So where it's hiding, I guess a very common one that we all see is early discounting. So a host fills to 90% occupancy, but actually a large portion of those bookings came in 60 to 90 days out at below the market rate. So on the surface, it actually looks great. So you have high occupancy, you have a decent ADR, but actually when you look at it properly, they traded price for pace. Now, a revenue manager would look at that and say, you didn't actually fill because demand was strong, but you actually filled because you were cheap. And that generally means that you've limited your upside and you're actually relying on what's already booked rather than what the market would have actually paid for at the time of the bookings.
Yeah, very much a false economy. Another scenario then, your rates look healthy, you think it's fine, but a revenue management professional sees that you're still leaving money on the table. Why might that be the case?
Yeah, this is a really good one, and I've seen it more than often, actually. I guess the direct answer to that is because ADR is not an outcome, it's actually a strategy. So you can end up with a healthy ADR, but still have priced incorrectly at the moment that actually mattered. So, for example, if you priced too early, then pushed your rates later when availability actually tightened, your final ADR might look fine, but you've actually still lost revenue on those early bookings that came in below the market. So the question isn't what did I actually achieve? It's did I get the right price when demand actually showed up?
Okay, then another one. How can availability look fine on the surface, but actually limit what a host can sell?
Because not all availability is equal, and it's a really important factor to remember. You might look at your calendar and think you've got 25% left to sell, but actually a chunk of that could be one night gaps or awkward stay patterns that don't actually match the demand. Those nights are technically available, but practically unsellable. So even if demand comes in, you actually can't convert it. That's a structural problem, not a demand problem. And most operators miss it. I mean, just putting it back to you, actually, your calendar, how often or not do you see this kind of situation?
Yeah, I do see it. And it's a really good point because sometimes it can be misleading when you see that you might have 10 days left to fill and you think, oh, great, I've still got 10 days left to fill. I've hit my revenue target for the month. Brilliant. I'm going to make more money. But if all those dates are single night stays and your minimum stay strategy doesn't allow single night bookings, then it's kind of pointless, isn't it? You've already got to where you're going to be for the end of the month. So yeah, it's a really good point. And I guess this kind of comes down to, I think your minimum stay strategy is a big deal here, and getting that right to support the being able to take those future bookings.
Yeah, and hence the reason why it becomes a structural issue, not actually a demand issue, right? And I guess just to add to that point there, what's again really important to understand is as an operator or a property manager, you're actually understanding what search demand or what demand is actually coming to your property. So we've talked previously about search insight and how powerful looking at search actually is. That kind of information allows you to understand who's actually searching for your property and what nights they are searching for. And then it's up to you to then structure that length of stay or that particular demand to your property. I've seen it time and time again where people do restrict on the length of stay strategy, maybe sometimes too aggressively, especially when it comes to different seasons. And I think then ensuring that you truly understand the data in terms of what it's telling you, who's searching for your property, and aligning that data or that demand with your property's length of stay restriction, it really then starts to show what the true demand actually is. And that's really the difference that you can actually make in terms of achieving growth in revenue or not achieving it at all.
Yeah, I think there's really very much a sweet spot here, and I think you probably only find out with a property once you've been managing it for a while. You understand what the patterns are, what guest behavior is like, and then you can switch those minimum stays around accordingly. But also, you've got to know your numbers. It's really important to know, what you need to make in order to make a profit. Because if you don't know your numbers, it all boils down to that, and you're going to be in trouble. So what's the risk of relying on a small number of bookings to drive your revenue, and how common is that?
It's actually very common, to be honest with you, especially in larger properties or peak periods. The risk is exposure. So if 50 to 60% of your revenue is actually coming from a small number of bookings, then a cancellation or change has a disproportionate impact. It doesn't actually mean that those bookings are bad. They are often great bookings, but what it actually means is your position is fairly fragile. So a revenue manager isn't just looking at how much revenue you have, but also how stable that revenue actually is. And it makes a big difference in repositioning your approach to it.
So how should hosts spot when demand isn't building in a way that will sustain their current performance?
I guess by looking at things such as pickup, for example, but then looking at it in context. Context is the key word here in terms of everything we speak about. Everything needs context. So when you're looking at pickup in context, you're not just saying, am I getting bookings, but am I actually getting them fast enough relative to what I still need to sell? If you've got a lot of availability left and pickup is slow or flat, that's actually a signal that the current position just simply will not hold. And that's really when you then need to act early, not when it's too late. I guess it's less about predicting the demand and more about reacting to the pace of the demand as it comes in.
Okay, then, Zach. So if this episode is about asking better questions rather than adding more data, what's one question every host should start asking weekly?
Again, I'd probably say the simplest one that you can probably ask is, do I actually trust this position? Everything else will flow from that. So if you actually trust it, you can push. If you don't, you need to protect and build. Most mistakes actually happen when people act with confidence on a position that they actually haven't properly questioned. And that really makes all the difference.
Very well said, Zach. It's been a pleasure as ever. Thank you for joining us on the latest STR Pricing Pulse.
Great. Thank you, James.
All right, we'd love to hear from you. Which of these 5 numbers are you actually tracking right now? And which one have you been ignoring? Drop it in the comments. We'll tackle the most common answers in a future episode. If this was useful, hit like and subscribe. We've got fresh content for STR hosts dropping every single day. And if you need to set the right rates for your vacation rental, check out Beyond. They can help you boost revenue by up to 20%. Scan the QR code on screen if you're watching on YouTube, or click the link in the show notes for further details. This is STR Pricing Pulse from Launchbase by Host Planet and powered by Beyond. Until next time, happy hosting.